Recording of labor cost. So we're gonna learn it in two parts. That is, the direct labor is debited to work in progress, right? Because we applied direct labor, and that would increase our work in progress, the job cost sheet. And since the worker is worked for us and we have to pay him the amount of labor, so labor is basically wages payable, so that is our liability. When liability increase, so we write it to the credit side, and when work in progress increase, we write it on the debit side. And the part 2 is that the indirect labor that the labor has work and that we cannot easily trace, so the indirect labor is debited to the manufacturing overhead, and that would be the actual one, not the estimated one, and it would be credited because indirect labor is increased, we have to pay them, so wages payable increase through indirect labor. So our credit side of the wages payable would be increase, while our manufacturing overhead debit side, we call them actual side, it's also increased. So what are the entries? The entries are that the cost of direct labor incurred increases the work in progress. So increase in work in progress, which is our asset side over there. So that would be debited. Manufacturing overhead expenses increase would be debited, and our salaries increase or liability increase would be credited. So that is a combined entry, which is debit and credit. So we have already recorded our cost flow or entry flow of our direct material and direct labor. Now we will record the actual manufacturing overhead. So what we call that, the actual manufacturing overhead is basically the debit side of the manufacturing overhead account. So the debit side of the manufacturing overhead account is basically increased through indirect material, and this came from direct material account here. And then the indirect labor, it come from the indirect labor account, and we just add it to the other overhead account as well. So the right side is called the actual overhead account. And how we gonna make entry? So let's see that. So in addition to indirect material and indirect labor, other manufacturing overhead costs are also charged to the manufacturing overhead account as they incur. So our entry would be manufacturing overhead is the debit side, while other overhead accounts like accounts payable, property tax payable, prepaid insurance, accumulated depreciation will be credited. So this is also a combined entry, which is a type of debit, credit, credit, credit. Okay, in order to further strengthen your concept regarding journal entries and T accounts, I have copied exercise 3.14 from your book chapter, page 124. So I'm just gonna give you 5 minutes. You just pause the video and try to solve this question by yourself, and at the end match the answer accordingly. Okay, let's start. Let me read the question. The Polaris company uses a job order costing system. The following data related to October, the first one of the company's fiscal year. So these are the entries. So and you are required to prepare journal entries to record the information above. So here I'm just gonna divide it here. Okay, let's read it. The first entry, that is raw material purchased on account 210,000. So it means raw material is increased, which is debit side, on account, which means it's a credit. So it means accounts payable is increased. Increase in accounts payable is a credit side. So entry would be raw material 210,000 to accounts payable 210,000. The B part is raw material issued to production 190,000. Among this 190,000, 178,000 belongs to direct material and 12,000 belongs to indirect material. So when direct material is increased, that will go to work in progress or process, and 12,000 is indirect, that will go to manufacturing overhead. So and our raw material will be decreased by 190,000. So the entry would be work in process, that is 178,000, and manufacturing overhead, which is 12,000, to raw material. $190,000. The C entry will be the direct labor cost incurred 90,000. Direct labor cost, that will go to work in process. Indirect labor cost worth of 110,000, that will go to manufacturing overhead. And since this is labor cost, it means we will create liability, that is the account would be wages payable. So here we're going to record it. Work in process 90,000, manufacturing overhead 110,000, to wages payable, that is the total would be 200,000. D part, depreciation recorded on the factory equipment, that is 40,000, right? So depreciation recording on factory 40,000. So depreciation is a part of manufacturing overhead. D part will be manufacturing overhead 40,000, and the contra account of depreciation would be accumulated depreciation 40,000. E part, that is other manufacturing overhead 70,000 credit to accounts payable. So we have manufacturing overhead 70,000, and question mentioned itself that accounts payable is the credit side, which is 7,000. So let's move to the next slide for the other parts of this question. Okay, here it is. The next entries are F, G, H. Again, I'm going to give you 5 minutes to pause the video here and just try to solve it by yourself and then match the answers. Okay, let's solve it together. So let me just read the entry that the company applies manufacturing overhead to production on the basis of 8 per machine hour. A total of 30,000 machine hours were recorded for October. So how much is the manufacturing overhead? It's 8 multiplied by 30,000. Answer would be 240,000, right? So since it is applied manufacturing overhead, dear students, just excuse this fireworks. So there's like a festival outside, so there are firecrackers outside, so please excuse it. So I'm gonna raise my voice. So here the entry would be F part is the entry would be work in process, which is 240,000. Since this is applied manufacturing overhead, which is the credit side of the manufacturing overhead, 240,000. The